corporate responsibility in terms of shareholder interest, which is moving now more towards stakeholder interest, meaning that companies can't have a single-minded focus on just increasing profits. They are being compelled to, even if I use the word compelled, they are being compelled to think about various other stakeholders, be it their employees, their vendors, supply chain, and the community at large. And by that, I do mean the environment as well. We are not here to talk about ESG. That, I think, has been, is the subject matter of a couple of other panels. We are actually here to talk about very basic corporate responsibility. We want to dive into some of the root causes with a focus on governance. Think we are there's abundance of laws, and yet every now and then we hear about a corporate fraud. Why does that happen? We talk about so many disclosure requirements. You know, SEBI comes up with governance norms requiring further reporting. We know financial reporting is changing very, very dynamically. Quantitative plus qualitative reporting. We have all of that, and yet we do see large corporates failing overnight. So where, who misses the elephant in the room, because it's not something that can happen overnight. Another theme that we want to touch here, which again goes to the root cause, is are companies turning their back to some responsibilities which perhaps are not written in the law, or perhaps are not enforced as well as they ought to be. But at a very basic level, they appear to be the right thing to do. So, one of the examples that we would like to perhaps just use here is whether the migrant crisis that India witnessed during the COVID period, was that a collective fault of corporate India? That's something that we will touch upon. And lastly, also, how are companies really doing on CSR? And we mean more, at a substantive level rather than at a form compliance level. So just with that theme, I'm going to ask all my esteemed panelists to just take 2 minutes each to just do some theme setting on your own part. Geeta, who's on various boards of some very prominent listed companies as well. She sits as independent director. So I think she's the perfect person to kick this off. Thanks, Geeta.
Good afternoon, everyone. Thank you, Vinati. I think, as you mentioned, I think for the last few years, actually, not just now, I think the business ecosystem was evolving. I think it was evolving to take note of other stakeholders besides just shareholders. I think there was also regulatory theme around it. And then, COVID happened. And when COVID happened, I think the pace has just accelerated considerably since then. I think the world as a whole just reset its priorities. And I think so did the companies and the boards, So now I think at every board level, they are identifying the relevant stakeholders. And I think understanding and mitigating their, concerns and see how we can look after their interests is becoming a central theme of corporate governance. I think it is sort of being accepted that, corporate governance is about balancing the role of economic and social, and also individual and companies. So, Vinati mentioned about employees. I think employees' wellness and health became a top priority during COVID for all the companies. Even the boards were kind of involved in that, right? And then what happened was a rapid, very, very rapid digital transformation. And right now, reskilling the employees, upskilling the employees, looking at the whole, learning and development cycle of the employees is a priority for the boards. We're already looking at it quite, in deep. In the NRC, we look at it. In the risk management committee, we look at the attrition risk. We look at employee satisfaction index. So all that is happening as a stakeholder for the employees, right? I think the other important aspect for stakeholder engagement is the feedback mechanism. So I think at a board level, what we are insisting now is the whistleblower, mechanism, the channels have to be open to external stakeholders as well as internal stakeholders. And the other important thing is that we are, I think in all companies now accepting and investigating anonymous complaints also. Because there are times that people don't want to own up to their names, right? So, and then of course, depending on the kind of complaint that we receive, we either investigate ourselves or engage with independent agencies to do that. So the other thing that we're doing at a board level is to seek reports from companies on social media posts. So, and at the risk management committee, from a brand risk perspective, from a reputation risk perspective, we are seeking that over the last, say, whatever, last 3 months, what have been the positive or the negative feedbacks on social posts, including like Glassdoor, for example, right? So that gives us a sense of how the company is looking after its customers. And, I'm sit on the board of a healthcare company. There, especially, any patient post is very, very important for us to look at. In the NBFC sector, in the insurance sector, the regulator has got some turnaround time for customer complaints. But as far as we are concerned, we've put much more tighter turnaround times for those. So I think customer, this thing. And then I think when we also come to the whole customer thing, we can't ignore the whole, this new generation thing. And I think we've done a great job as parents to bring up very conscious generation. They want sustainable, they want efficient supply chains, they want to engage with companies which have a purpose. So I think we as a board are weaving in this into our decision making, that whether as employees or as customers, what is it that they want, right? I think another thing that I'm doing at audit committee is that when I'm looking at litigations, I'm not looking at them from a point of view of contingent liabilities alone. I'm looking at a point of view that is it reflecting any practices by the company which is adversely affecting any stakeholders. So example, one insurance company that I work with, all the awards that have gone against the company are really seriously analyzed to see if we could have serviced that customer better. So this whole litigation piece, which we try and do not in the quarter and audit committee, but in a separate audit committee that we hold, is another thing that we do. So I think the important thing is that companies are willing to make a commitment. They're announcing that. I think Shell has just onboarded Leena Srivastav. She's a major decarbonization expert. She's a very well-known one. She's been taken on the global board. So I think that's a huge commitment in the statement they're making by inducting her. And I think we as board are also nudging companies to just kind of set up targets, because what can be measured, gets managed.
Thanks, Geeta. So I'm going to now look towards Richa, actually, being part of the management of a company and being the CFO. What are you seeing?
Okay, firstly, I'll just say that it's amazing to be here, talking largely to a legal fraternity. Because usually what happens is it's the lawyers who keep talking and finance is sitting back and listening and just wondering, okay, now how much do I lose? There's another lawyer coming up, am I going to recover something or lose something more? So thank you so much for taking out time to listen to some of the woes of financial reporting, and I'm hoping there's going to be more empathy coming from there. So yes, when we talk about financial reporting, it's not just simply put debits and credits. That's the easy part of it. When we are talking about financial reporting, it's really firstly understanding the context you're operating in, the ecosystem. Are you responsible to your shareholders, to your employees, to your investors, to banks, and even the government? So making sure that what you are reporting adequately addresses all those concerns, and it's not just reporting, it's driving the right behavior within the company. so that tomorrow the numbers don't start talking something that you never want to happen in the first place, right? And I'll go on to say that a company is a very, it's a huge amount of resource, right? It's employing people, it's making products, it's dealing in a lot of financial transactions, and it has a lot of money at its disposal. So good governance and financial reporting has to go hand in hand to make sure whatever the resources that the company has access to are being put to good use. This is where we are accountable to the society, we are accountable to the government.
Thank you, Richa. Sujjain, so Sujjain, apart from being an excellent lawyer, is also checking the diversity quota on this panel. Please do take note of that.
Thank you. Anything that I say, of course, Vinati knows many-fold over, and we have Ajay also here, so they will say much more than me. But I just wanted to put a few things into context. We have a mix of Indian lawyers and non-Indian lawyers. And when we are talking about corporate governance and everything that's come in over the last 20-odd years, one of the differences that we see between UK, US, and the Indian legal system, as far as corporate governance is concerned, is the context. As far as the UK and US are concerned, the shareholders are far more dispersed. And therefore, all those provisions that came in were really to keep a check on poor management. While in India, it's been quite the opposite. The shareholders are not dispersed. In fact, shareholding is in the hands of a few families or individuals, and who hold more than 50% of even a listed company. As a result of which, the focus of the laws is more on disciplining and keeping a counterweight on what we call the majority shareholder, or the Indian expression, promoter. So when you are looking at governance laws, etc., and what's happened in this country, you have to keep that into context as we go along. And the second only point I would like to make is that despite there being this call that government makes too much regulation, too much laws, government has always taken the support of industry, and usually stalwarts of Indian industry, whether it is the Birla Committee, the Narayan Murthy Committee, now the Kotak Committee. So it's always that sort of credence that has been taken into account in bringing all the laws that we will now discuss as we go along. Thank you.
Thank you, Sujjain. Sonal here also sits on a lot of boards and is a lawyer. And I'm going to really ask her to set some perspective on the employee side and the social side.
So, good afternoon, everyone. And I hope that you stay awake through the session. It's a tough time, but so I think I've been very fortunate to sit on boards where the focus has always been employee first, customer second. And right from ensuring that we've got open door policies, we've got very effective mechanisms of whistleblower, ombudsperson. And I think the trick is not just having these policies in paper, but ensuring that they get heard at the right level. So an independent director, for instance, will be responsible for the complaints that come through the ombudsperson process. And what I can see changing completely is that this whole focus from corporate governance has moved to corporate character. Right from, us as independent directors, there is a risk involved, there is a liability involved. So how do you even choose the board that you get onto? And I'm on boards which are completely promoter-driven boards. And I think for me, the big test was, how does the promoter conduct themselves? Their flamboyance, their commitment to people, ensuring that their organizations are run professionally rather than being more of a family-held unit. And I think what we've seen is that when a promoter is confident enough to have the organization run professionally, when you've got, for instance, the chair of the board is an independent director, where you don't meet the minimum legal requirements, but you go beyond in ensuring that there's not just one woman on the board, but you have more people, more women on the board. Diversity doesn't mean bringing in the same kind of people. For instance, I am miserable with reading a balance sheet. It's the time that my brain just shuts, and that's not my contribution to the board. And my contribution to the board would be more to do with ethics and compliance and good practices, and without using the word morals, I think the way that you conduct yourself on the board and having the courage to call out, to question, to give the directors an independent platform to meet with the auditors. I think those are things that we're seeing changing. The law sets the minimum standard for what an organization needs to do. And I think independent directors bring in that extra. And if management is welcoming to that, you have the comfort of knowing that you sit on a good board. So I'm lucky to that extent, and I hope that that trend continues.
Thank you, Sonal. Geeta, how much influence and power are independent directors? I'll ask you this to Sonal. Are they actually asserting at the board and say you perhaps sit on quite a few audit committees as well?
I think, as Sonal just mentioned, I think corporate governance actually begins and ends with the founders, the principal shareholders, and in case of widely held companies like ICICI Bank and ILFS, in the head of the CEO. So I think that's one important thing that we have to keep in mind, and that is why I think the whole point Sonal made of choosing your companies very carefully, right? So if a founder and a CEO is fundamentally honest, then everything that you do for corporate governance is going to be effective. You know, audit committee, having independent directors, having good quality auditors, all that's going to be effective if you want it to be, right? I mean, having said that, I think corporate boards, there's a lot of external scrutiny. There's a very, very tight regulatory regime now, which is there. So I think because of these factors, our job as independent directors has gained some sort of importance and also become very, very difficult. Because, the greatest challenge we face is information that we receive is from the management of the company. That is a main source of information. I try and speak to, some analysts. I try and read industry reports. I sit as a part of investor calls that happen after the quarter end. But still, the main source of information is the management themselves. So one thing that I feel that helps me a lot is that in between the quarters to have these informal interactions with the senior management of the company. You're going to have that thing to just call them up and check kya ho raha hai type of thing, and that is sort of something where I think we can influence. And if you see the law, actually most committees have a majority of independent directors. The audit committee has to have majority of independent directors, NRC also. And both of these committees have the maximum amount of, influence, right? So, and in these committees, if you have access to the right set of information, and if you have a mindset that you want to understand and, make a difference, and I think there is a lot of power which rests with the board to influence, right? Again, I'm coming back to the point of timely to information. I think besides information, it has to be timely, it has to be relevant. I think a lot of times companies tend to just send the agenda paper very late. So of late, we've started doing this. We started postponing agenda items. We do not, if something is stable, we do not consider it. We say no, it has to be postponed. Even if we have to hold another board meeting 3 days later, we do that. So we've started asserting that influence over the companies. And I think what we've started doing is even for results, earlier people used to say, no, we can't. There's too much insider trading, blah, blah, blah. But I think there are apps and there are these now, these modes that we say you upload there, but do it at least 48 hours before results are discussed. So we've started asserting on these things. And I won't say we're there with all the companies, but I think it's making a difference. Another thing is what is happening is that, of course, in this whole digital system, data is very easily available. So a lot of times just being, too much data is being thrown at us. So that's the other thing that we are now asserting, that we don't want all this kind of data. It has to be relevant. It has to be timely. We don't want this deluge of data on us, So in terms of just simple decision making, I'll just, tell you about one of the companies which was a regular dividend paying company, but there was some industry stress, and there was also, the company was facing, cash flow situation where if they declared dividend, it would come out the reserves and not profits for the year, right? And since there was uncertain environment, and this is pre-COVID, I'm not talking about post-COVID. Since there was uncertain environment, we as the independent directors felt the dividend should not be paid and cash should be conserved, which is preserving capital. I mean, it took us like 3 hours because as far as the company was concerned, they wanted to maintain their track record of being dividend paying, but eventually they agreed. So there is now, I mean, if we all sort of talk together, talk sense, we are able to influence decision making. Another company actually make them give out much more dividend because the company didn't have any immediate need for capital, and this improved the ROAS and the share price. So there is this kind of engagement which is happening. I think what, again, Sonal had mentioned this, we're always meeting the statutory auditors before the quarterly meetings. And Vinati has suggested to me that I should start making notes of that. Thank you, Vinati. It's a very good suggestion. So that's something we're doing so that, we don't have to, there are no surprises during the audit committee and during the actual decision-making process. And if anything needs to be settled before, for example, purchase price allocations, the company valuation valuers, the auditor valuers. So that's where our independent perspective comes in. And, so that's the kind of influence we are discussing. Let me also check if there's something else I want to add to this. I think the other thing I wanted to add here was the internal auditor's point, right? So, I actually hold separate meetings, audit committee meetings for internal audit, because I think that's a very important part of the whole governance process. There are my eyes and ears. So I don't ever combine litigation matters, tax issues, and internal audit issues with the year-end, with the quarter-end audit committee, because I think it just clutters up matters. That's one thing. And then one more thing I wanted to add, and I'm forgetting it. Give me a minute. The point what Sonal had mentioned. I think to do all this, achieve all this, we actually need diverse boards. We need boards with different competencies, different qualities, different skill sets, so that, different perspectives are there. And to communicate, different qualities are required, I think, to communicate to the management. So all those different qualities, different skill sets, I think that makes us, the communication to the management effective and to the companies effective. And I think that's how we influence decision making.
Thank you, Geeta.
Vinati, I would like to just add one short point to that. So very well said by Geeta. In my experience, I've just noticed a few things that help for an independent director to be more effective. As per the law, okay, you need to have an independent director for governance. By default, what that means is that the person ends up asking a lot of questions, more of an auditor, trying to drive an agenda to make sure everything is disclosed, everything is okay, there's no issue into financial reporting. What I have found is to be really effective as an independent director and to add value to the company and also do your job more effectively. If you can pick up one pillar, one small area where you can contribute and add to the company, it could be strategy, it could be human resources, it could be even corporate social responsibility, which you lead or co-lead with someone within the company. That's when you really get to understand the fabric of that organization, the culture, and then do a more effective job as an independent director, because you can only ask so many questions and the finance and MIS teams can only give you so much of information. The rest of it is about sensing, engaging basis your experience.
Which is why I think pre-audit committee meetings help. Which is why I think it's important to have pre-audit committee meetings with the CFO, with the auditors, and actually not waste everybody's time in the meeting.
Yeah, I think Geeta and Richa can probably just let the lawyers keep quiet. This is quite a great conversation. I think the point that Richa is making is a very important one, which is, engagement beyond just at the board level to try and understand a little more about the company in the area that the independent director is actually comfortable in or has the required knowledge, interest, etc., which actually makes me turn to Sonal. Because Sonal, you said that you are mortified by balance sheets. But, both Sujjain and I will tell you that the law, unfortunately, doesn't make any such distinction. And if if there is a fraud and there was a misreporting in the financial statements, it sort of exposes all the directors who approved those financial statements. So how do you protect yourself?
So I actually had to go back and, you know, when I got appointed on the board and I was given all these papers, I actually had to go take a course on how to read balance sheets. Math is not my strong point, and I had to put myself through extensive training. One of your sponsors, in fact, ran a wonderful program. Ernst & Young ran a program on women on the board. And I actually said, look, I need help to read a balance sheet. And they were more than happy to teach me the ropes of that. I think, Vinati, the question is, you know, how do you also keep yourself updated and abreast? This is, the company knows what they're doing. We come in every quarter, you know, good companies will call you in more frequently, or I think you take the initiative to come in more frequently. And I think you need to be involved enough to be aware of everything. But I'm not a finance person. And when I bring a certain quality to the board, the finance person may not have that quality. So I think we balance it out very well without absolving ourselves of liability, because that area is not ours. But from an involvement perspective, I would say that, you know, even if it's something like hiring of key resource personnel, you can ask the right questions even as a board member. And we do like to get involved not only for the leadership hiring, but even plus one, because succession planning becomes such a huge issue that people don't talk about. You know, and not just succession planning at a company level, but even a board level. Right. You know, there's a certain term that we sit for, and you want to hand your, you know, your seat over to someone because you've understood the company enough in that much time. So I think just being aware, keeping yourself updated, getting more involved. So the companies where I sit on the board as an independent director, if I'm traveling to a city and that organization has either a manufacturing unit or a, you know, a presence in that city, without informing anyone, I just walk in and take a look. And I think I bring back a lot more value because, you know, at the board, people will show you what they want to show you. You will not really get to see the reality of what happens. And I know the difference because when I go into a place with prior intimation, the place looks different. And when you walk in without telling anyone that you're walking in, there's a complete different picture. So I think you've also got to take that initiative to get involved with the business that you're in and not just attend the board meetings and attend other meetings. But I think one thing that's really helped me, we do a lot of meetings with just the independent directors. And in fact, it's one of those requirements that says, have you done a dinner together or have you done a lunch together? And it's not about socializing. I think it's about synchronizing the work that we do and, you know, getting and learning from the different, I think you've got people who are subject matter experts, and even to engage with them beyond the board level is really helpful. So I think it's a combination of all of that. But yes, that balance sheet, despite the training, scares me. I spend more time reading it. I never go in for a meeting without preparation. And I think that's the trick. You've just got to keep studying and improving what you know and don't know.
No,
Thanks,
I'm
Sonal.
sorry, but I'm like really itching to add to this point, and after that, I'm going to keep quiet for a
No,
bit.
I was actually going to ask you.
You know, so I would urge everyone and all the lawyers over here to not to be scared of balance sheets. You know, it's just a trick that finance people have to scare you out. It's really very simple. You know, don't even look at the balance sheet. Look at the finance person and ask him or her, okay, how much cash are you generating? It goes back to a very basic fundamental. If you were running the business, what would you want from the business every year? You would want cash in your bank, right? So ask, how much cash are you making? Are you making more cash or less cash? And let the person explain and take you through all the numbers and ratios. Make sure you've got your answer because they know how to confuse you. It's not just the lawyers who confuse the finance people. Works other way too. And after that, ask another question. So did we invest more money into the company this year? Working capital, which is basically, you know, all your accounts receivables and payables, and capital. Did we invest in more plants? Did we increase our debt in the market? If the answer is yes, okay, what was the return that you generated on that? Again, going back to the same fundamental thing, if I had money, if I had more money this year, and I put more money in the bank, am I earning more? Businesses are very simple. They are there to make cash, and they are there to help you make more money than you would putting it in a fixed deposit. Let your finance person help you, walk you through all these details as you sit back listening to the answers, and you'll get all the answers.
Thanks, Richa. In fact, even the Companies Act has now made some amendments in Schedule 3, which is for financial reporting. And there are some ratios for financial performance that have to be presented. So that's also perhaps, a step in the right direction to help Sonal. So Jen, you've been waiting very patiently. Tell us your views.
Thanks. You've given us good tips as to what to ask the CFO. Uh, I think as a lawyer who's on the board of a listed company, there is a limit to how much you can get involved. There is also a check and balance that you need to keep. Listen, you can't learn accounts overnight, whatever courses you do. So you have to accept that if you are in a decent listed company, you have a CFO, you have an internal auditor, you have a statutory auditor. All of these three are very experts. If they cannot guide you and give you the correct picture, there is no way that you're going to outsmart them. So I like to pretty much stay back on those situations and rely on them, making it a point in the minutes to say, I relied on this, that, and the other. That's just instinctive for most lawyers. But I think where we do come in is because we have so many clients and we see different situations, we are able to identify what is perhaps more risky because we've seen it before and what is less risky. So, as someone rightly told me, as lawyers, we are like the fence on the edge of the cliff, protecting the company but at the same time, we can be the ambulance below. So I think that is the comfort that we as lawyers bring to the table. I don't think we bring anything more, or we should be trying to achieve more, because I think it impinges on a number of other issues that we may have ethically.
So I think Sujjain talked about lawyers being on the fence. I think we have statutory auditors also, who keep going from being watchdogs to hound dogs to puppy dogs. What are you seeing there in terms of interactions that happen between statutory auditors? You mentioned internal auditors, of course. But what we are seeing in most corporate frauds, the first line that really goes under are the statutory auditors. They sometimes become the collateral damage. So what are you seeing? And we've also seen, to be fair, the statutory auditors say, we told the independent directors, we told the audit committee independent directors say, oh, we thought the statutory auditor was doing, they were doing their job. So we see a little bit of this passing the parcel happening when things go wrong. What are your views on that?
See, I think, again, there's no one answer to this, right? It depends pretty much on the culture of the company, it depends on the chairperson of the audit committee, it depends on the time that the IDs are willing to invest in the company. I don't think there's anything stopping. I think everybody knows what's the right thing to do, right? Everybody knows how much to engage, how to draw a line between management and board. And I think as far as the auditors are concerned, from my side, I've seen them to be pretty open with the independent directors. I think they see us as their allies in the whole process. So as far as I'm concerned, whenever we do the audit planning for the year with the auditors, and we engage the management with it, I think it's a fairly detailed exercise on what, depending on the industry, depending on the company, what will get more attention, key audit matters identified before, what kind of management letters are they going to, what is it that they're going to look for from the company in terms of comforts. I, of course, insist that, please don't tell me that you've relied on the company for, say, a purchase price allocation. You have to say that you've seen what the company has done and your experts have been engaged and they're satisfied. So I think this is something that the auditors have to also say, even in terms of contingent liabilities or any other liabilities, for them to say that we've gone by the management estimates is obviously not acceptable. But I've seen that, a continuous dialogue between the auditors, directors, and the company helps resolve all these issues. Yeah. I know there have been a lot of scandals, but as a percentage, if you want to see it, of the entire corporate India, I don't think it's that many. I think there is enough, but I think if it's a number of companies and then see this, I think there's a little more worry in our minds. I think one or two things take away all the good work that's happening in a lot of other places, you know. That's this thing. So statutory auditors in terms of, so every March, you know, we sit together to decide the audit plan for the next year of this thing. One is the audit committee charter, and the other is inputs, you know, from the management, from the auditors and all. And, you know, also on the internal auditor, I want to just tell you that it's, whether it's internal auditors, actually, or the statutory auditors, I think they have the comfort that me as chairperson or me as audit committee member is available at any point in time to reach out, right? So that is one comfort. And I also look at the composition of the statutory auditors team and the internal auditors team. I want to see the internal auditor team is always, especially when it's internal, you know, well staffed so that all issues can, you know, they should not be compromised on the quality of the audit because the team was not staffed. In fact, I sort of recommend to them that have cross-functional teams, rotational teams for internal audit. Even in case of statutory auditors, we ask for it, you know, even if they can continue, we ask for a change in the signing partner, we ask for a change in the team, so that there's some continuity, but at the same time, there's also a fresh set of eyes to look at those numbers. So I think that is what we are doing with the statutory auditors.
Thank you, thank you. Sujjain, I wanted to ask you one question, actually. What do you think of, so in the UK, the independent directors, or more particularly, I think the audit committee, they write a report of their own. So like the statutory auditor writes a report, you know, to say that this is the basis on which they say it, you know, it reflects a true and fair picture. The audit committee also has to write its own report. Do you think that sort of accountability actually is it something that you think could be a welcome move? Because so I just wanted to get your views on that.
I don't think either having a greater frequency of meetings or physically writing out your views are going to matter. Eventually, if frauds and deceptions are to occur, they occur with such cleverness that it beats everybody. And right from Enron to Modi to whoever you want to talk about, it's been done.
But in some ways, don't you think, so of course, none of this is going to really help prevent a fraud. But I think the allegation when a fraud happens against, these stakeholders is not that why didn't you prevent the fraud? It's more like why didn't you detect the fraud? And that in order to be able to show that I actually did everything that I possibly could to try and detect.
See, where you are able to see something very clearly in front of you, you're going to stop that in some way. And if that still goes ahead, you'll write something in the dissent. And I think now in the new act or the new regulations that are coming out, dissenting directors' votes need to be mentioned and publicized so that the minority shareholders get a chance to see what one dissented from. So I think that's one way to give that publicity. But as I said, whatever you do, so long as you are acting with integrity and to the best of your ability, you will be able to prevent whatever you can prevent as a reasonable person. But after that, we've seen you can have committee after committee from Birla to Kotak, you have the next one. You will not get over the fact that when people want to defraud, they will.
Richa? Sorry.
I just wanted to build on what Sujjain was saying. Disclosures or declarations can only be done once you are aware. And to even find out that something wrong has happened, the first thing we have to address is capability. A lot of times, frauds, misappropriations, or wrong acts by the companies are often not done by plan. They just happen. For example, if I take advances of loans to someone, or not filing of a particular kind of tax declaration somewhere. It's not that someone intended to do it, he or she did not gain anything out of it. It's just that the person didn't know this was not in line with the law of land. And hence, it also went unreported till the time a statutory agency picked it up and filed a suit on the company. And these kind of things happen very often. And why do they happen? Because a lot of times, all the agencies like statutory auditors, legal counsels, or any other consultant, they just assume that management will know. It's that you're talking to the CFO, you're talking to the CEO, you're talking to CHRO, so on and so forth. They're all very intelligent people, and they will know it, and let me not undermine their knowledge by telling them what they're expected to do, and that's where we go wrong. I really expect my statutory auditors not to focus so much on declaration, which will happen anyway. If I give them the right set of accounts and the right declaration from my end, they will do a good job of analyzing it. I need them to come 2-3 times a year and tell me what is it that's changing in the external environment and what are the kind of disclosures I should be getting from my team. What are the kind of trainings and knowledge they need to have to be able to do their job correctly. If I have a sales manager sitting in Uttar Pradesh, what is his local statutory environment? What are the excise policies in play there? What is it that he can do or not? So breaking it down into his capabilities, educating the team, and then informing them anytime something goes amiss versus this process, or you have to take a decision that's not in line with the SOP, come and take permission, come and seek approval. So addressing that capability is what will help you ensuring you also get better disclosures from the company.
Thanks. I think, there are also quite a few examples of very cleverly hatched frauds as well. So I think it won't be fair to assume that all of them are unintended. And, the question that is almost left in everybody's mind is, there was this elephant in the room which just everyone seemed to have missed. So then you do tend to wonder. So let me just move a little away from this, topic of fraud and look to Sonal to, tell us about like how are corporates responding to these other stakeholders like employees, workmen.
So, Vinati, I'll go back to COVID and two of the organizations where I sit. One is housing. And the hit was that there was so much insecurity with migrant labor that they were leaving the sites and, moving back to their villages. And it was all over the news. There was mass exodus. And I think one of the most amazing things that I saw were people actually dipping into reserves in these organizations and ensuring that there was enough for their labor working on site, be it housing, be it the vaccine drive, be it access to oxygen concentrators. So I think it was one of those issues of, there was a lot of people, and you read all over the news about how charitable organizations were in terms of what they were doing for the larger, for the larger, I think, beneficiary base. But where it came to our own people, I think many organizations failed in terms of migrant labor. People looked after their employees, but migrant labor and, our support staff are people that really got ignored. So I think the trick was to really look after those people. I think the benefit we had was projects were delivered on time. There was no delay. We had no shortage of labor. So I think a lot of it starts out by looking after your own people. And I think this whole focus on, it's not just qualifying for a certificate of a good place to work or best places to work. I think it's really going down and seeing what is it that you can bring to your workforce that ensures retention, that ensures growth, that ensures diversity. And, diversity is not about hiring more women. And I constantly have this conversation with people. Diversity is about making your environment so secure that I, working there, go out as an ambassador to say, come here, this is a place that values different thought processes, they're open to debate, it's a place where people can agree to disagree, it's a respectful environment. So I think that whole inculcation of giving employees just the strength and the freedom and the capacity to grow is something that I think is also the board's responsibility. I know that very often people question, this employee cost has gone up. Have you hired more people? And I don't see the correlation. Employee cost can go up because you're actually matching salaries to best in industry. So for me, I think the concentration on the fiber of your organization is making your employees happy. You have a happy employee, you have a happy customer. That's the way that it works for me. And I mean, to me, HR practices, be it your ethics, be it the freedom to express, be it the stability of a whistleblower policy, I think that's what.
And what
that
about
adds.
responsibility? You said you were in housing, so I'm sure, there's a lot of people who are not employees on your payroll directly, but they are contract workers. So what about that indirect responsibility? Post-COVID, are you seeing, boards discuss this, talk about it?
Not enough. Not enough. I think we're sometimes so focused on making money, and I think Geeta spoke about it, other panelists spoke about it. I think the focus is now shifting from making money to doing the right thing. And I think COVID was a very big leveler for all of us to just come back to your roots and say what is important. So I can see the change there definitely. I know that, and I'm not talking about my role as a board member, but in the capacity of the work that I do otherwise as a lawyer, I think just going in and making workplaces safe and not differentiating between a full-time employee and a contract employee is something that really helps. But I don't think companies are doing enough in that area.
Thanks,
I just wanted to add that, I have seen a considerable movement there in terms of supply chain. So what they're doing is, actually, if there are these vendor payments are being held back till everything has been taken care of. So there is that thing, and of course, supply chains are undergoing change, right? They're altering, they're changing vendors. So, I mean, you're right, Sonal, the pace could be better considering the challenge we have faced, but people have started doing that.
So Jen, CSR, you think companies are doing okay on that front? Do you get a lot of questions from clients on, can we treat this as a CSR expenditure?
Sorry if I'm being very divergent in this diversity role. But the KPI and KRA that most companies I sit on normally ask, KPI is not key performance indicator, it is kitna profit isme. And KRA is also kyun rakhu aapko. So that is, so when it comes to shareholder desires, especially when you're in a promoter-run company, those are still very high. Yes, I think after COVID, a sobering effect has come. And the fact is that the next generation, especially the sons and the daughters of the promoters, are also realizing now that good business doesn't mean just making profits. It means spreading out a lot of things. And as a result of which, I think over time, we are seeing changes. And, there's 3 or 4 things that artificial intelligence, renewables, and people. These are 3 things that come in every conversation, whether post-board meeting or during or after. So I think there is a move to look at CSR beyond being a mandate that the government gave. And, but I still think money is really number one, and these are fairly low.
Richa, can you share your views on CSR? How are companies actually looking at it? Are the choices based on what is easy versus, what takes effort?
Okay, so I'm going to talk from my experience. Firstly, in India, CSR is something that the CFO is accountable for. The company law holds me accountable and responsible to review that the money was truly spent on activities that were of charitable nature and did not lead to any kind of business gain for the company. Other than the law, this is also a passion for me and a high focus area for my company, Pernod Ricard. So we do give a lot of importance to where the money is being spent. As a philosophy, I've seen my current company as well as prior employers try to contribute back to the society versus leaving a negative footprint. So if I take my current example, Yes, we use a lot of water. We try and make sure we are water neutral. We do a lot of rainwater harvesting. We make sure there's no wastage. We develop dams where possible. We plant a lot of trees. And yes, this goes from CSR. We try and develop this ecosystem around our plants. After that, the other area where we could have potentially left a negative footprint was our packaging. So this year, or early last year, we have removed mono cartons from our bottles. We do not use Tetra Pak, even though for the cheaper drinks, Tetra Pak would be a more financially viable and a better option, making us more profitable. We are still sticking to glass bottles with simple labels. And even when it comes to glass, we are trying as much to recycle these bottles, pick them up from the bars and the joints versus leave them lying over there. So a lot of work goes. And if we have funds left, and yes, there's always how much funds are left, because at the end of it, it's a business. The investors also want their return, so we cannot jeopardize that. But if we have surplus funds, then it goes into health and education of the societies around our plants. So I would say good companies, companies which are here for the long run, where sustainability is important for them, are trying to do as much as they can to give back to the society. And the law of the land is supporting it. If a company is profitable, the law is waking up and making sure they go and spend back on society versus pocketing that extra money.
Thank you, Richa. I think we'll take some questions. Normally, I would have actually said only questions, no comments, but this is a lawyer audience, so I'm not going to make that mistake. Yes.
When it comes to that point where, you've got the money with you and you need to spend it, the easiest thing to say is put it into a government fund. There's a relief fund. That's the honest truth, right? That's where a lot of money goes. I think the trick for CSR is there's some very well-known NGOs around our country. And it's very easy because people feel when you give money to these NGOs, you don't really need to do any kind of assessment. You don't need to do a test. These are established NGOs. My experience has been that if you actually get into the workings of those NGOs, you'll see that more than 45% of the money that you give is used for administrative cost. And there's very little that actually goes down to the beneficiary. Whereas if you take the trouble to research smaller NGOs that are strapped for funds, and you go and you look at the way they work, a mere 7 to 8% is used for administrative costs, and the larger money goes to the beneficiary. It takes an effort, but it's worth the effort. It's very easy for me to look at these 20 established names and say, I'm going to give my money there. I'll get my certificate. They've ticked the boxes for everything. I think the trick is the more effort you make, the better your heart feels. And that's where we are able to influence companies not to go with these 7 or 8 or 20 established NGOs, but go beyond. When it comes to getting more women on board, I'm not saying it because I'm a woman, but I actually think women bring a very different perspective. I think they bring a very different, not stereotype, but I think they bring a very different style onto that board. There are some statutory committees where I sit which are only women, and I see the benefit of having a male perspective. So it's got nothing to do with majority of men or women, but I just feel one woman on the board with 8 men. When you go out for dinner, you're handed the menu, and that's not my competency. So I think you need more women on the board just to break these stereotypes.
Okay, so firstly, your question was, how do you inspire them to invest more or spend more on CSR? Okay, charity really comes from the heart. Okay, I'll take a very quick example. During COVID times, Pernod Ricard, primarily an alcohol manufacturer and seller, was going out of its way to arrange oxygen concentrators. Okay? At the same time, a company that makes oxygen concentrator was charging its own employees for the use of these concentrators. So that's where the culture, ethos, and heart lies. Yes, you can still influence. When it comes to matters of heart, all you can do is educate and influence and let them decide. You can keep showing case studies of how large corporates have set up long-lasting charitable trusts with their money, with the surplus that they had. For example, Tata Memorial. For example, you have escorts and so on. And maybe it'll appeal to that, that ticking nerve that says that, okay, I want to invest more as well. That's about it. And when it comes to diversity, it's been very well said. I will not repeat that. Diversity comes in many forms, right? It's gender. We talk very easily about man and women, but it also comes in different kind of capabilities. And it is a proven fact when you have diverse ways of thinking, left brain, right brain, or a totally different kind of a gift, you get better ideas, better governance, higher productivity. And this is an easier battle now. Boards are beginning to understand this and embrace it.
Thank you. We have two more questions. One there, Ajay, you had a question, and so three. We'll start with you.
Yes, I was saying that I'm on the legal panel of Comptroller Auditor General of India, like CAG. So we have the responsibility to make sure that government money is spent for the purpose it is allotted. Now, companies, of course, are involved there also, directly or indirectly. So what we should be looking for so that companies are doing their duty under CSR properly.
Okay, it's a CSR question. Sonal, you want to take it or you want to?
So you're saying only for CSR, is it?
That's right.
Okay, so I don't, I have worked with the development sector earlier, so I can give something from that perspective, what Sonal was saying, but I don't personally work with many CSR committees. But I think, in terms of money being spent, I think if you think, are you thinking forensic? I don't know. But if you're not thinking forensic, if you're thinking as just, is the money well spent? If that is what you're thinking, then I think what I have seen as best practices are, A, to identify the areas that you want to work with. So it doesn't become that, what she said, giving one check here, one check there, that's not a thing. So for example, companies have identified, say, skill building, health, education as a segment that they want to work in. And in that segment, I think having worked with the development sector, I am aware of what Sonal is saying. You see, if you go wide, then you see only sort of, touching this thing. There's no point doing that. Large organizations go wide. That's why their expenses are very high. And local level organizations go deep. That's why the money goes to the beneficiaries. So again, for corporate CSRs also, I feel, and I always, even if I'm not a member, I advise that look at saturating certain areas. So one is, for example, if you're looking at education in a certain district, can we say that there'll be zero, everybody will, all, whether girls, students, boys, everybody will pass at least middle school. So, and what can enable that? Like, for example, one company decided that, but we realized wo pani bharne jana hai. So what can enable that to achieve that education? What problems do you need to solve? So I think those are the things where people are looking at one sector, going deep. I think those are indications. And also, how are they looking at sustaining the project? So you may say that 3 years I will do this. How will it go beyond that? Will you, over those 3 years, build capabilities within the community to be able to bear the cost and to continue that project? So I think some of these objectives would help you understand if the money is being well spent. But Sonal, you can add something.
Actually, I think we are out of time now. I can see 4 zeros in front of us. But Ajay, we'll take a question from you.
Thank you.
The
First,
women here are requesting that you direct your question to Sujjain.
I'm just talking very quickly about diversity. First of all, thank you. For the first time, I think in a legal conference, we have two hardcore financial professionals. So I think, Vinati, congratulations for that confluence and the diversity to start with. Second, very quickly, Sujjain said something about accounting. I can't become an accountant overnight. The fact is, neither accounting, with due respect, nor law are rocket science. And Richa sort of referred to that. We are very good as lawyers, of course, in making people feel it's rocket science. And obviously, because we've got to charge them. And I think accountants do the same. The point I'm making is that given that they are not so complicated, and given that whatever else we say about, companies, good employer, good practices, the market still, unfortunately, primarily rewards profits. And as a result, you could be the best employer, you could be good. I'm not undermining those issues, but you need to have very robust financial accounting. So you could be a great employer and lousy financial reporting, and that doesn't fit the bill. So the question is, should the companies be making an effort to make their directors independents, financially literate. I was very impressed with the Sonal looking at balance sheets, etc. But should there be an attempt to make all the directors at least reasonably financially literate so that they can, even if they can't, sort of picking holes in the balance sheet, but they can actually engage when the dialogue or discussion is going on, they can actually contribute to it in some way or the other. Richa, maybe you can answer that.
So I definitely agree with that. Firstly, when you said that the stock market rewards financial performance, I would just add a few more parameters to it. Stock market rewards sustainable, predictable financial performance. And all that comes with high quality talent and the right ethos within the company. So yes, to that point and the observation made by you, it's very important that people at the senior management level are financially literate. And most companies go out of their way to make sure they integrate finance or finance support or financial understanding in each vertical, whether it's commercial, whether it's sales, marketing, or manufacturing. Directors coming up from those lines have hard-coded financial metrics which they have to deliver, and they understand what levers they'll have to pull to deliver these. And even understanding the financial statements, balance sheets, all of that, because each director of the company is responsible for signing those documents, for signing off on the disclosures. So it's very important that they be educated. And it's simple, it's not that tough, like we said.